We're going to go into some Q&A. How long before the end of your mortgage term can you start shopping for a mortgage? The standard is 120 days. What I always encourage people to do is try to start getting your documentation ready for the assessment, review, and underwriting process before that, so that way we could get the full 120 days working for you. There are some lenders that offer 130, but 120 seems to be the norm, and I always encourage people start 2 weeks before that to get your documents in order so we can start properly assessing and get shopping for you. So if any of you are coming up to a renewal in the very near future, give our office a call. We'd be happy to help. And lenders are getting a little bit aggressive as we enter the spring market, but still rates aren't as attractive as they used to be. So there is going to be a bit of payment shock when people realize that you're losing out on something that was a really good benefit for you with lower rates on your previous term. So buckle up, it's going to be painful. Hey Vince, what's happened to the used Porsche Tracker? Is it going to make a comeback? You know, if for those that are watching for the first time, on previous episodes, I used to always track how many used Porsches are for sale in the GTA, and during the interest rate increases, we saw a trend of used Porsches up for sale, and that was more a data point that I thought would be cool to track. And I went on Auto Trader, tracked how many used Porsches were for sale within a 100-kilometer radius of my office, and every week I would track it. And we did see a trend, and I think the top number was 1,261 at one point. The last time I checked, it was down below 1,000, but it is winter time, so there isn't such a good market for Porsches in the wintertime. But I am looking to come up with a new data point, and I'm trying to identify what tools are available to track this in a very efficient manner, and that is garage sales. Okay, I want to track how many garage sales are occurring or advertised in Kijiji or Carrot, which is an app form. I'm trying to see if I could get an efficient number count on a weekly basis, and maybe look at how many people are opting to get rid of stuff to free up some cash as we move deeper and deeper into this recession type environment that we're in. So look out for that. I'm going to try to move off the Porsche Tracker and go into maybe a garage sale counter and see how that plays out. I'm going to experiment with it, and we'll see how it goes. How can I port a mortgage to a new property? Do I need to requalify again? Okay, this is a very good question, and not one that comes up very often. As people still have access to their low rate on existing terms, you should try to utilize that rate for the full term before having to pay more. And sometimes you have to port it to a new property. Now, it's very rare that someone transfers over the same amount that's owing on one home onto their next home, because they're either moving up or moving down, so they need to alter that mortgage amount. And lenders allow blends. They offer maybe two components if you're within a home equity line facility where you could have multiple components in it. And you do have to requalify. So the question that's being asked is, do I need to requalify again? Yes, you do have to requalify. The property needs to be approved. The qualification has to be approved. And lenders do have variances in their qualifying criteria, but it's very important to find out what hoops you got to go through to keep that rate. And I encourage you, at any cost, see if you could keep the remaining term, because if you're sitting at 2.5, under 3%, and you can avoid paying 5+ on that mortgage amount that you still have some term on, it may be worth it to protect it. Okay, so if you do need help with that, great question. Give our office a call and we'll walk you through it. How do you avoid a bad private mortgage? Okay, this is a very good question, and one that really folks should focus on. If you are in a situation where you need a private mortgage, I encourage you to speak to someone who's been in the industry a very long time, someone who has significant experiences in private mortgages, and they could properly assess your situation to see if it is the right decision to get one. You know, Ron Butler, a good friend of mine, talks about this all the time. You have to be careful. Private mortgages are very expensive, okay? There are lender fees, there are broker fees, there's appraisal fees, and legal fees for both yourself and the lender's lawyer. So you're picking up the whole tab on everything. And you want to make sure the rates aren't predatory. You want to make sure the terms are flexible. And I really encourage you to speak to someone who's been around for a long time that also has the courage to tell you if it is the right decision for you. Sometimes you're only buying time getting a private mortgage, and you're going to end up back to where you should be, and that is maybe get rid of the property, you're in over your head, and it's not a temporary situation. A private mortgage needs to be for band-aids and bridges to get you somewhere in a short, just buy you some time, okay? It's not a permanent solution. If you're going from private to private, it's not a good move. Everybody will eat away at your equity, and everyone's going to get richer except you. So be very cautious. Speak to people that have been around that are going to give you sound advice, and people that are on social media, because they're not going to risk putting people in a bad deal and risk having someone come back on social media to slam them. So deal with somebody that is experienced, has a profile, and has a reputation to maintain, and you're going to get some good sound advice. Hopefully that helps. What do you see when people see a payment shock at renewal? Are they ready for it? 5 years is a long time, and a lot of people have life events that occur, and renewal dates really creep up on them, and people aren't necessarily ready. You'd be surprised at how many people are not aware when their mortgage comes up for the renewal without having to look at their documents. So these things creep up, and when they do, and they see where rates are today relative to where they were 5 years ago, it is extremely shocking to them. And, they're not ready for it. And like I said, 5 years is a long time. They may have gotten this mortgage as a new couple and now have 2 kids and someone on mat leave, and cash flow is going to be impacted with a higher mortgage payment. So we're seeing different scenarios like that. Now, the good thing is 5 years is a long time, and a lot of people do have equity in their homes in that period of time that they got to lean on, and there are some positives in the situation, but the reality is, from a cash flow perspective, it is going to get worse. Now, folks that we don't deal with that come to us for the first time that have these static variable payment mortgages, that's where the biggest shock comes in, because they now have to get back to the original amortization when they've been on one of these infinity and beyond mortgages. I call them the Buzz Lightyear mortgages, where their payments aren't even covering the interest costs, so they're in negative amortization. Those are the biggest kick in the nuts. Like, they are just floored when they see where they got to go to on a payment to catch up on this amortization schedule. So we are seeing some shock. The investors are also an interesting group, because their cash flow goes from positive to negative when they're in these fixed terms, going from maybe 2.5 to 5 and a bit. They're upside down on a cash flow basis, and now they got to make up for that because rent isn't necessarily covering all the costs. So we're seeing different looks on people's faces, and they're not pretty. But all in all, we are working through different solutions for them. We're trying to help them and guide them and deal with budgets and other tools to help them get through this period that's probably looking like it's going to take a while to get through.